All right. Tag everybody really quick.
Can you tag me separately so I feel special?
Stream's up too. Yeah, I can.
Oh shit.
I can for sure. Give it about a few minutes for guys to hop on. Go through today's stuff. There's not a whole lot to talk about. Excuse me. We're gonna go through semiconductors. I think that was the bright spot this morning that we were looking at. And so we're going to go through semiconductors and look to see if there's any opportunities there to potentially re-enter shorts after closing the AMD short. And then we're just going to talk about general market sentiment, update index levels, etc. Unfortunately, though, I will say that it was a boring day, and I don't really expect it to alleviate itself anytime soon. Trading through a very, very, very challenging environment right now. And so I posted a tweet, ironically, and it was, all right, the world's ending. Where are we going to put our capital to work? And ironically, I was thinking to myself after I posted that, and in some instances, it's best just not to put your capital to work. I mean, in Chris C. Caddy, a guy that I follow who I followed based off of the Chat with Traders stuff. He summed it up really well. I'm trying to find the tweet right now. Straight up for 5 minutes, straight down for 60 minutes. Straight up for 5 minutes, straight down for 60 minutes. It's incredibly volatile, and there's just a time to put capital into the market, and then there's a time to play defense. And I don't think that there has been a more glaring sign of playing defense than, today, but also the last 2 weeks, 3 weeks. Very challenging environment to be trading through, regardless of whether or not you're going long or short. As a matter of fact, JC Perrett and the All-Star Charts guys, although they're not always right, they did put something out today that I laughed at and I agree with. And they said, listen, man, well, here, let me just, I don't know if I can find it. Essentially, it was, hey, what looks good today? Like, are there any trades right now that we should be putting on? And apparently their conversation was no. If you go long, every breakout is failing after a day or two, which is what we experienced with First Solar. But every breakdown isn't necessarily giving out a huge payout either, because we're getting these random and disgusting bear market rallies that could last one day in a dead cat bounce, or could last a week before we capitulate back down into new lows. So it's not really a great opportunity to go long or short, even if we have targets, obviously, to the downside on some of these indexes. And so they're selling premium. That's their way of trying to capture profit in this. They're looking at increased IV, and they're going, if we don't want to take directionally biased positions, let's play the theta side of it, the IV side of it. And so they're selling premium right now. For those of you that have experience selling premium, feel free, but I'm not going to. I'd prefer just to sit on the sidelines and wait. But we're going to go through some semiconductor shorts in about a minute. Four obvious shorts came across scans this morning. We'll look at them and see how they moved intraday and see if there's any opportunities. I will tell you right now that today we probably not the day to open them, though. We do not want to be opening shorts on huge capitulation days, because we're going to be paying huge premiums. There's no point. No. Okay, so let's set the scene here. Let's go through the indexes first. Wild day in VIX as well. Look at how crazy the VIX has been. We were all the way up near 34. We're currently 32.5. and we closed on Friday at 31. So it's like just a fucking wild day, just absolutely insane. Huge range on VIX. I mean, choppy day Apple. Look at the candlestick on Apple. Like this is not a fun environment to be trading long or short. Dollar slight up. Remember, thesis holds when dollars moving up. Stocks tend to be just getting blasted, and it appears over the last 4 trading sessions, the dollar has once again begun to rally. Robin, I don't know if you have an updated entry point on the dollar that would actually make you want to get long again, but we've been holding the 50 RSI essentially since the beginning of the year, and we are once again oscillating to the upside. What happens if we do break 11413? That could happen. It very well could happen. As a matter of fact, it could happen as early as tomorrow. And if that does, that puts further downside pressure on stocks. That relationship is continuing to hold. By the way, do you guys see finally, because we're talking about relationships, Sam from FTX, do you see what he tweeted, Josh, about the correlation? I don't know if Josh is here right now, but CEO of FTX, obviously FTX is one of the largest US-based crypto exchanges, right? And he tweeted out today that the NASDAQ and the price of Bitcoin are trading at a near 1-to-1 correlation, although Bitcoin tends to move twice as much. And it's just funny that it's not like a secret at this point, but this is a relationship that we observed a year ago. Literally, it was last year. It was October, November of last year when we first started talking about this. It's taken about a year for somebody on his scale of having that much attention, that much platform, that big of a platform, to actually get that message out that Bitcoin is trading the exact same as these frothy tech stocks, the frothy growth stocks. And you remember, I don't know if you guys posted about it on social media, but I was saying, listen, there's a high correlation here. We ran the correlation coefficient model. We're looking at it. We're going, listen, Bitcoin and growth trading relatively the same. I got so much backlash from anybody that saw that video that was into crypto. I'm not saying you guys, but like people outside of the group were like, that's fucking stupid. That's not real. We're still going to the moon. We're doing this, we're doing that. And it's a little bit of, obviously I didn't make enough money off of this, but a little bit of indication there that Sam came out and actually tweeted it. I just had to give him like the head nod, I guess, this morning. Okay, so let's look at S&P 500, SPY. Gotta call it the way it is, right? Sub 360. We're level flipping. We had an opportunity to get back down there a week and a half ago at this point. This was 1 week ago. We were threatening with a breakdown. We got a little bit of a bump back up. Found support. Here we are again testing it. I think it's reasonable to expect this time that it's probably going to not hold. All right. Where oftentimes the support level is tested, the weaker it inherently becomes. 360 tested again for the second time in a week does not scream bullish to me. I would expect 360 to break, and that would be a new risk on level to the downside for the S&P, right? The Qs already did break. Qs have showed relative weakness all day today. Shouldn't be surprising considering we've been talking about the weakness in growth in tech all day today as well. But the Qs are firmly below our risk on level, being 275, 276. We're currently at 266. This is a 52-week low on the Qs today. IWM, I'm going to get rid of some of these stupid arrows that we drew that we were talking about last week. IWM flirting with the breakdown as well. Gotta call it the way it is. If we're flipping levels like this, you have to expect that the easier trade is going to be to the downside, even if it's not going to be a necessarily easy trade. Like I just said, if we're going to play these shorts, we have to play them aggressively. We have to play them quickly. We cannot overstay our welcome. bear market rallies completely wipe out 2, 3, 4, 5 days of capitulation in a single gap up. Don't do that. If you find yourself up 50 to 100%, take some profit, turn the trade free, do what you need to do. Do not find yourself in triple digit profit holding for an extended 20, 30% spot price move, because this market is going to bounce eventually. And when it does, it wipes everything out. And then obviously a week later, you're going to be back down to where you were, and you're going to be fucking mad because you closed your trade at a potential loss, potential break even, a minor profit. Now it's up. Just don't. This is very, very hard. So if we do attack these charts, which it looks like we might with the semiconductor short here, understand that these are going to be short-lived trades. We're going to attack low volume areas, higher percent chance capitulation zones, right? So indexes are all cracking. Ian's not on voice right now, but one of his favorite traders, Spencer with SMB Capital, he uploaded a funny video on Twitter today saying he was just waiting for the markets to crack so he could try to time an intraday bounce, but he couldn't. He himself couldn't concentrate because of the Columbus Day parade going on, and his office is right there. But everybody is fully aware that these indexes are cracking. That's the point of that. But nowhere are they cracking with more glaring obviousness, to me at least, are the tech sector. All right, so tech sector hit a 52-week low. XLY did not yet. I want to point that out. Consumer discretionary has not hit 52-week lows. But from current price, we're only about 4.5% away from 2020 highs. Whereas XLK from current highs or from current price, we're still 13 to 15% away from those 2020 highs. So there's a lot of froth still in the market for tech names. Within that tech sector, there are a few industries. None of them look frothier. Second time you love froth, huh? Semiconductors. The semiconductor space from current price still has an additional 16 to 20% move to the downside to 2020 highs. Does it have to hit those 2020 highs? Absolutely not. But that has been the benchmark, the anchor that we have essentially used all year. Let's continue to use it while it still works. IGV is firmly below the 2020 highs. That's your software. FDN, firmly below your 2020 highs. I'm not saying these things can't continue to drop, but semis are in free fall mode, whereas IGV and FDN are not. You throw this VRVP on the SMH chart right now, and you have a medium volume to low volume node all the way to 2020 highs. Right? You guys can see that as clear as day. When we go back to the AMD chart, this was a chart that we traded as a group to the downside. We did hit our price target today. Nobody held it for as long enough to hit the actual PT, but that's fine. When we look at this trade in hindsight, we're going to go, well, no shit, it was going to hit 60. The writing was on the wall. But I want to point this out just because we're talking about semiconductors and the fact that the market is not easy. When you actually zoom in and look on a day-to-day basis, and after we got the $75 capitulation. We got the move that we had originally expected to happen. But then we get how many days of consolidation? 5 trading sessions straight, 1 week straight of AMD floating back to the upside. And then that Thursday candle, which most people closed the majority of their position that was still open. They were still in profit, but they were not deep profit on that last part. That candle is fucking disgusting. So there should be absolutely no shame if you sold on Thursday prior to the move on Friday, because that Thursday candle is absolutely disgusting. It is. And you did not want that trade to go from deep green to break even. So applaud yourself for the AMD trade. We did hit 60. Having said that, there are opportunities on the chart that are showing the same sort of setup. So once again, look at your VRVP on the right-hand side. You see the medium to low volume node that we just slid right through, right? TSM was the other one that we were in. Nobody's in it right now, which is okay as well. This is still a trade that could potentially be active, but I think there's better trades now because TSM is already halfway through its move. So if we look at TSM, a massive move to the downside through a low volume node to about $60, those 2020 highs. Well, now we were scanning earlier and we found 4 names in particular that caught our eye, right? We had QCOM, we had NVIDIA, we had Marvell, and we had, what was the other one? Let me find it. AMAT. All four of these have opportunities on the chart and opportunities on the chain, but we're not going to just blindly say buy one of the four. We're going to have an intelligent conversation as a group here, and we're going to try to find which one makes the most sense. So I'm going to post the charts first, then I'm going to pull up the chain. You have QCOM, NVIDIA, Marvell, and AMAT. All of these are offering horizontal level breaks with accompanying low volume right underneath. That's the exact same setup across all three, or all four rather. Now we have to make a decision as a group, which one makes the most sense for us to want to attack. And if you don't agree with the group, you should at the very minimum be able to argue your case. For example, Dustin took TSM instead of AMD. Both were winning trades. TSM was the worst of the two. But why did Dustin take TSM over AMD? I never asked him actually. But if you're going to go against the group, feel free. Choose something else, but be able to argue it if somebody asks. There should be a reason why you're going into a trade that you're going into. So let's pull up QCOM first on the chain. And we have a decision to make. Should we be looking at November's or December's? So November's are 39 days out and December's are 67 days out. What do you guys think? Any preference? Mike says December's. Just err on the side of more time. I think that there's an argument for both. Go ahead, Josh.
I was going to say November's, because if we're not going to be holding for those triple-digit moves and we're just looking to get these capitulation events, then we might as well take advantage of the higher deltas with the November's, since we're cutting them likely shorter.
That's the exact argument that I was thinking. If you wanted to go November's, it's because you're going to be closing off of a capitulation move, though, right? So like you get the big flush and you're out either same day or maybe next day. If you're holding the Decembers, you have a little bit more liberty to let price kind of meander its way through, maybe catch one or two capitulation zones, but obviously the risk of catching that second capitulation zone increases the longer you let that trade go, because maybe it doesn't happen. You know how it goes. So I think there's an argument to be made on both sides. If you're trading the Novembers, it's going to be I don't know how to say this, so I'm just going to say it's going to be a little bit more stressful of a trade, because you're going to have to be managing it on a day-to-day basis. The Decembers, you're going to be able to kind of let go a little bit more. You're going to take a step back and kind of let time take its side. Can't do one of each. Yeah. Okay, so how about we do this? So let's look at Novembers and Decembers, and we'll come up with a play for both, and then we can argue at the end which one makes the most sense for the chart. How about that? Because there are some that look like they could be capitulating immediately, and others might have, I don't know, a few sessions left before they do. And in that case, you'd probably want to buy those Decembers. So for QCOM, let's pull up QCOM first on the chain. So realistically, the flip here was at like 122, 123. We're currently at 115, so we gave up a little bit of profit here, but that's all right, because our ultimate target is going to be somewhere around, so 2020 highs, and where volume really starts kicking in is about 95. So we can use that $100/95 area to our advantage. QCOM is sitting on some slight medium volume right now at around 112, 113, 114, somewhere around here. Excuse me. So let's look for the Novembers. Line up the deltas, see if anything makes sense. The 105, 100, put debit spreads. Now the risk rewards are going to be a little, they've floated back a little bit because they're not at session lows, but they're going to be skewed slightly against what we normally would, because we're going to be wanting to buy on up days. So QCOM technically We would not be buying this until potentially tomorrow, right? But as of right now, the 105-100 put debit spread is running just under 4-1. It's not my favorite, and I don't know if you'd want to go any further out than that for the Novembers. So 105-100 Novembers. It's not my favorite setup on the chart. It's not my favorite setup on the chain, but it is giving a near 4-1, and I'm assuming on a pullback we would get that 4-1. So I'm going to type that out really quick for the QCOM November. 105-100 put debit spread 118 for 382 right now, but likely to get better. And we'll give this a B setup. Let's look at the Decembers really quick. We can push down a little bit farther. We can grab that 100 to 95. If the 2020 highs around 95, I think we should, if you're going to buy the Decembers, you should probably be looking to target that gap fill to the downside from 101 down towards 95. It's a 6 to 7% spot move. If you get down there, I would assume that gets closed maybe in one session. Assuming that we're down there when the market is showing weakness, I would expect that gap to fill very quickly. There's essentially zero volume. And if sellers are in control down there, I wouldn't expect price to stay down there for very long. But if you're short, you'd probably want to utilize that capitulation area as an opportunity to take profit. So the 195 put debit spread makes sense for the Decembers. And type that out. The 195 put debit spreads, you're going to get them right now for 109, for a 392, and I still think that's a B setup. So not the worst, but not the best, at least in my mind. And you guys could be looking at that chart completely differently. And if you are in the future, when we open up the conversation, let's get through all four charts, we can argue back or forth. So let's look at NVIDIA. The chart for NVIDIA itself, we liked the original breakdown at 166, and as a matter of fact, Vinny grabbed that capitulation area. By the way, Vinny, if you're listening to this, I hope everything's going well. Vinny was on his way back to Sicily for a family emergency. So Vinny, if you're listening to this, praying for you, bud. He was short 166, closed off of a capitulation move, which is awesome, great move. But here we are once again, and the original profit target for NVIDIA was 140, which coincided with the high volume node. Well, we just broke that high volume node today. Today we're breaking through the support that we have found, that range bound consolidation that we had through most of 2020 and half of 2021, right? Almost a year straight of sideways consolidation at around 135, fluctuating around there. Excuse me, Jesus. But now we're in this environment where we're in a low volume zone all the way down to 2020 highs again. 2020 highs being somewhere around $78. So from current price to $78, we're looking at a potential 30 to 35% spot move. Is that unrealistic to expect? No. In this environment, I don't think so. We just shorted AMD for that, almost that same amount, and it worked. So obviously the Novembers, we're not going to be looking for the home run, but the Decembers, maybe we are. So let's pull up NVIDIA on the chain. Novembers. What are we thinking here for a price target on the Novembers? Current price is 117. We're going to be buying on an up day. What do we think here for the Novembers? The 100 area again, I think. Maybe. I think that's realistic. $17, about a 15% drop down on a 4.13 ADR. Yeah, I think $100 is probably within reason for a November. And we can mix and match with some put debit spreads. This is a 73 IV, so it's a lot higher than QCOM. QCOM's like 51, by the way. So NVIDIA is just crazy high IV right now. The 105-100s are not giving us a 3-1, but I'm assuming on a pullback day they would. So I'm going to type this out. I like the chart. The setup on the chart looks great, but we need to make sure that the chain agrees with us. So 132 for 365 is not enough to fulfill that 3-1, but on a pullback maybe. So Let's go to the Decembers. We can afford to get a little bit further out there. I don't know if the $80 is that too out of the question. I think it's too far out of the question even for Decembers. I don't know, actually. The R to R is not great here because we're down huge today. And we've been down huge for 2 sessions in a row. So as a matter of fact, the R to R is not here on the NVIDIA play, but the technical setup is. So maybe we should hold off on this until we get a pullback in these risk to reward for the spreads get readjusted here. Because right now we're not even getting like a 3-to-1 on some pretty far out stuff. So it's unfortunate, but I think the mature thing to do is to sit on the NVIDIA trade for right now, just simply because the risk reward isn't lining up. So from a technical standpoint, I think this is the nicest looking chart. From a chain standpoint, so far, nothing really wows me. If you guys find anything on the chart, feel free to let me know. I'm going to move on, though, just because I want to get through the other 2 names. We got Marvell. Cool, JP. I'll type it out. You can read it when you hop back on. So once again, Marvell, we're going to want to wait for a pullback day, but this is the breakdown area we're looking for, right? This $40 area. Low volume all the way down towards 27.75, which is 2020 high once again. Let's go to the chain. Pretty straightforward trade here. The Novembers, this is a 67 IV, so you're right on the cusp of being able just to buy straight puts, like JP just said, yeah. And it's relatively cheap. So the price target here, current price 40.40. I don't think you're going to want to wait for a 2020 price target on those Novembers, but we can probably target, let's see here. We can target the 35s. I think that makes sense. 35s for November, just the straight puts. You can run them for $1.29. Yeah, $1.29 on those 35 puts. Looking for a 10 to 12% move to the downside off a 4% ADR and low volume. I think that 35 makes total sense as a price target. Plus, they'll be even cheaper if you get a pullback tomorrow. So we get a bounce tomorrow. Those things will be cheaper. Probably get them for like $1.15 or $1.10. Marvell, November, 35p. Right now, going for $1. What is this? $1.30. And the Decembers, no volume on the 30s, or no open interest on the 30s rather, but the 32.5s you can get for $1.50. I don't know if that makes sense. There's no, I think I'd want to target the 30s, but there's only 65 open interest on those. You can grab the, you could, I'll put debit so it isn't going to give you a 3-to-1. It's going to be close, but okay. So for Marvell, I think those Novembers make the most sense. The Decembers don't really make sense with the open interest on these contracts. So unfortunately, probably going to skip the Decembers for Marvell. Okay, hey Matt. Yeah, this looks fantastic. We want to make sure that there's an opportunity on the chain. Okay, so this is a clear cut trade. I mean, there's very little discussion. I'm going to repost the chart because this is the easiest chart of all 4 of them to read. It's essentially the exact same setup as AMD. We have a very, very low volume slice of price for 20%. So 20%, basically sub $70, $69, $68 price target. We have essentially zero volume on the way up, that we would expect zero volume on the way down. We did get the move today, an awesome move. We were down, from at its low, we were down over 6% today, which is huge. So that capitulation zone is merited. You have to make sure that we can find something on the chain that makes sense, though, for AMAT. The Novembers, because we already tested a part of this, I would assume that maybe you can just straight up grab the 70s. Yeah. This is going to be a little more expensive, though, so maybe not. Let's see. You can go, oh man, I don't know if you want to do that. I was going to say buy the 70, sell the 65, but that's going to give you a 4-to-1, but do we really want to sell that 65? What do you guys think? Buy the 70, sell the 65. Let's see what it looks like in December. I love the setup on the chart. But once again, we're running into an issue with the chain. 70.65 is going to give you a 4-to-1 with a 57% P50. So that fulfills both of those functions. It's going to run you $100 for a max profit of 4. But selling the 65 on the back end, I don't think that we would be able to capture the entire profit off of this. Maybe. We could, maybe, but I would have preferred to cap it at around 70. What do you guys think? Buy the 70, sell the 65. Does that make sense or not? Yeah. Or Novembers. Or the Decembers for AMAT. Let's see what the Decembers are. Decembers aren't going to give you the risk reward, though. Yeah. Have to be the Novembers. Yep. Okay. I'm going to look at one more thing. I'm going to look at just straight semiconductors. Just a position on the ETF itself. None of these are going to be open today, by the way. Going to want to see a pullback in semis, a bounce, I should say. A bounce up to 190 would be perfect, but I doubt that happens. The ETF itself is going to be very, very expensive to trade, so probably not something we want to do here. And I doubt we're going to be able to find something that makes sense. What's the other one? Soxel. Holy crap. Leveraged 3x. Oh, just socks. No open interest. Okay. Not easy. So of those four, assuming we get a pullback, which one makes the most sense? QCOM, NVIDIA, Marvell, or AMAT? Mike likes the AMAT. All right. Rolling with the AMAT. We'll look at this again tonight, but I think the setup is the easiest to read on the chart. It gives us the cleanest breakdown, just like the AMD play. It reminds me just like it. So yeah, okay, let's roll with AMAT. As long as there's enough liquidity on the chain, we have a play here. Open this up on a green day and we're good. Yeah, QCOM does have the lowest ADR as well. Is that good or bad for you? Depends on what you're looking for, I suppose.